As an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. The early years of Amazon 18 years ago, I was a shareholder both in the equity and in the preference shares they used to have in those days. That stock corrected every 12 to 18 months between 38 and 58% every single year, over and over and over again. People just couldn't get their heads around what Amazon was doing. And it continued that way for a decade. It's no different than what's going on right now with Bitcoin and other cryptocurrencies because there's no institutional demand yet for the product. People keep saying institutions are involved, but they're not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now, but this isn't going away, and these senators and congressmen and women know this, and that's why they're bringing these and advancing them. All of these senators are all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment. But boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company, and then on down. Polygon, I got involved with Sandeep. I liked his story. I met him in Dubai. You know, trying to reduce gas fees on top of Ethereum makes a lot of sense for India and other countries like that, like what he's doing. I bought a piece of that. Love what's going on in the Serum projects, Solana. I'm a big fan of what Sam Bankman-Fried is doing. These things all make sense to me, but in the proportions of diversification. Now that portfolio, I'd say about 8 weeks ago, was at 21%. Now it's down at about 18. There's been a big correction in the market, but you've got to hold your nose and get used to the volatility. And it lets me adjust positions. I can add a little bit to my USDC. My compliance department doesn't consider USDC a money market or a proxy for cash. They consider it a highly volatile equity. That's because of what's been going on in stablecoins. So I'm limited to a 5% weighting there, and I'm trying to get some policy while I'm here in Washington. And remember, we go right back to that. Give me one thing, just give me policy on stablecoins and let the market compete. And I can put a lot more into that space because I've got a lot of cash on my operating company balance sheets, and I have nowhere to put it. And inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stablecoins. That's why I keep telling everybody, get behind policy, because you're going to get a whole lot more capital into this space. There's 52 billion already in USDC. Tether's out there. That broke a buck, so I can't touch that. And of course, Luna was insanity. Well, we now know algorithmic-based stablecoins, well, they don't work so well, do they? So the market will figure that out, and they'll basically adjust accordingly based on risk and return. I don't invest in projects that I don't use. I don't care whether it's a product or it's a crypto product or whatever. You don't see me in a lot of these very speculative tokens because I don't use them. I'm looking for value there. I'm intrigued by the NFT market, in authentication of physical assets around the watch industry. That's a space I'm very involved in. That's a private investment, along with other giant collectors and watchmakers and horological societies. But that's just my personal interest. So it's the things that I really want to dig into, that I invest in. But you're right, there's a lot of room for private projects because, I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. So you want to invest in some of these people. These are the smartest hands over keyboards all around the world. They're not working for the traditional industries. They're on the chain. And that means there's going to be a lot of productivity there. That's what you want to bet on. It's like betting on Steve Jobs when he was just drawing fonts with a felt pen. That kind of idea. It's the same thing going on now. These guys are going to be big productivity for the economy, and you've got to put your money behind them.